Welcome all our viewers, welcome back. This is CRT Paper Kit Sonia. So today we are going to cover a very comprehensive analysis of the week. Today is 14th of May and I'm recording this for my classes and anybody who's willing to watch. So sit back, relax, get a pen, get a paper, and we look at the fundamentals. We look at technicals in the aspect of CRT, OHLC, and SNR. Welcome. So this week has been a very fruitful week. We have been having the following events in the news calendar. The first one, Friday last week we had NFP. This week we had, you can see for yourself, you can see for your screen, we had core CPI month to month. We had CPI month to month and CPI year to year. And we had core PPI month to month. We had PPI month to month. And we had retail sales and core retail sales. I was very fixated on PPI and CPI because these are the tools that measure inflation in an economy. So if you do not know this news, it's not a must for you to cram it. TradingView has, not TradingView, Forex Factory has made it in a way that it is easy for somebody to know what the news is all about when you come to this open detail. When you click open detail, you will get everything that you need about the news, what the news is all about, what it measures, what you expect. If actual is, you can see they're saying if actual is greater than forecast, then it is good for the currency. And here you have all the data. You have all the data and the history. When you click more, you can see, you can get the history of the core CPI month to month, how it has been. You can see in the month of April, we had 0.2, the forecast was 0.3. So it was a little bit less. March, it remained unchanged. February, it remained unchanged. January, it was less. The inflation was less. But coming to May, we have 0.4. This is a hot print. So we are having a high inflation in terms of the US and the DXY. And when you go to the DXY, you'll notice a bullish momentum. When I come here and search the new tab, let me search for DXY. No, DXY. Let me see if it will come. When you go and search for DXY, this is 0. Let me search for DXY here. DXY. You can see, I have just a few. You can see what is happening. DXY is gaining strength. If I come to the daily time frame since when the news was released, retest, you can see what has been happening. This is Tuesday. You can see Tuesday. Wednesday, this is Tuesday. We had the bullish momentum from Tuesday when the news was released. You can see it. So this was Friday, Monday, where my cursor is, that is the bluish here. That's Tuesday, Wednesday, Thursday, and today now Friday, where we're supposed to close the weekly candle. So you can see what is happening, fundamentals, and they set the bias, technicals show you where to enter. So when you come back to Forex Factory, we had different we had different datas. For core CPI, we had 0.4, which was the actual, which was greater by 0.1% on the forecast. Continue. when you look at the CPI month to month, it was unchanged. The forecast and the actual was unchanged. You can see it's 0.6, 0.6. CPI year to year, there is an increase in 0.1%. So it means you're having a high inflation when it comes to consumer price index. And we'll come to understand what is the meaning of consumer price index. What does it measure? If it is high, what are the consequences of that in a few? Then we had core PPI month to month, and the actual was 1.0 and the forecast was 0.3. So meaning the actual, you can see this is a very hot print. If you come to the data of CPI, when you look at the history of CPI from 2026 and 2025, we have never had a print of 1.0. This was the first time. You can see on April we had the actual of 0.1. They had forecasted 0.4. So it means like here this inflation was not high. In fact, there was a decline from what they had expected. March 18, 0.5, 0.3, it was just slightly high. February 0.8, 0.3, January 0.7, 0.2. But look at May, we have 1 and they had forecasted 0.3. So that was a very hot one. That was a hot one. So we'll come and see what that means. Calendar, and then we'll go to the charts and see how it has influenced gold, how this news has influenced Euro USD, how this news has influenced GBP USD and other pairs. So let's continue. We have CPI month to month. We're not looking at CPI. We're looking at PPI, Producer Price Index. PPI month to month, we have 1.4% and the head forecast is 0.5%. So you can see whatever is happening here, right? So my main focus for this week's trading was those two news. We had CPI and PPI. And I want us to come back to my small notebook here. And I want us to study 1, 2, 3 things before we go to the charts. So let us understand what is inflation and how does inflation affect prices, how does it affect goods, how does it affect the central banks, how does it affect interest rates. So let's continue. Don't go anywhere if you are ready to learn. So inflation, you can see it is the rate at which prices rise over time. So we can see, like, for example, bread maybe in the last year was 60 and in this year it is 120. Then that one is a hot one, that is inflation. And we have deflation, and we have just moderate inflation whereby bread can be 60 bob today, the next day it can be 62. That one is okay. But when you have a sudden change of prices spiking up, then that one is an alarm to the economy. Those people who have done economics can write in the comment section about inflation and deflation, because I know they're in a better place to understand this conversation, right? So if inflation is high, then money buys less, living cost rises, and then the central banks often react by raising interest rates. So why is this? Because people are spending more money. So this one can cause inflation. So why are people spending more money? Because remember, inflation happens when the prices of goods and services escalates. The same product that you're buying 60 bob today is the same product that you're buying at maybe sorry for that. So you can see people are using a lot of money to buy the same goods and services. So this causes inflation. So if many people have money and are buying a lot, shop runs out of goods quickly, sellers raises prices. So example, everyone wants to buy maize flour, then the price goes up. This is called demand inflation. So you can see the type of inflations that we have. We have a demand inflation. Sorry for that. We have demand inflation whereby a product has a lot of demand, but the supply is less. So what happens to that product? the price hikes. So that is what we call demand inflation. Like there was a time where flour, unga ya ugali was missing in the shops. So what happened? The prices of unga was so high and people were scrambling for it, and the supermarkets had to just limit people to take at least one. But the prices was too high, reaching at around 200 and was it 220 or 260? Around there. So that was way back. Right now it is a bit stable, right? So when you see something like that is what we call demand inflation. So things becomes expensive to produce. Very common. Even if people are not spending more, prices can still rise. Why? Why do prices rises? Why do price rise? And people are not spending. Another thing is like fuel prices, because fuel prices are used everywhere in transportation of goods and services. So when the fuel price goes up, expect the products and services that we the consumers are supposed to be getting, they will be high. The cost of transportation has increased, so that journey of the product reaching from the manufacturer or the producer to the consumer, it will lead to a high inflation. So you can see why how the inflation comes. The fuel goes up, transport becomes expensive, electricity cost increased, farmers produce less food. So you can see all this is what we call cost inflation. So number one type of inflation is that we have demand inflation, whereby a certain product is needed but the supply is less, so the price just doubles. That is what we call demand inflation. And then we have something that we are calling cost inflation, which is caused by bei ya mafuta. When the price of the price of fuel increases, then expect everything will be hurt, because fuel is the key thing in the transportation industry that helps manufacturers and consumers to meet. And how do they meet? Through the transportation of goods and services. So that is what we call cost inflation. And then there's this other one which is brought by drought. You see, drought. Now there is, I don't know how I can call it. Is it calamities or excess rain which destroys food? So you can see goods in the market are not enough and the demand is still the same. For example, in this time of the rainy season, there's a lot of rain. So when the rain destroys crops in the farm, we need the same goods, but now the supply is less. So you'll find that those goods will now start hiking. Like for now in Kenya right now, the prices of tomatoes is not one tomato is very costly because it is the time of the rainy season. Tomatoes do well during the warm, not warm and humid, warm and cool climate. But right now during the rainy season, you'll find that the tomato prices are hiking up because the product supply is low, but the demand is still the same. So if drought reduces maize supply, prices go up. So these are the types of inflation that you'll find in the economy. Cost inflation. We have this one, demand inflation. And this one, I don't know if I'll call it calamity inflation, but this one is just brought by natural causes. Yeah. So what measures inflation in an economy? We have two. We have the CPI and the PPI, the Consumer Price Index and the Producer Price Index. Those are the two things that measures inflation in a country, or in an economy. So what happens when you have inflation? How does it affect stocks? How does it affect bonds? How does it affect the central banks? So this is what we are trying to get today. So if inflation, how does it affect the stocks? Just a moderate inflation, not a high one, like the price has just come from 60 maybe to 62, 63. That's just moderate inflation. So it can support economic growth. That one does not hurt the economy. But high inflation often hurts stocks because company cost rises, and consumers may spend less. Growth and technology stocks are usually affected the most when interest rates increases. You'll come to see why most of the stocks falls when we have high inflation because of the high interest rates, and you'll see how high interest rates how high interest rates, how they are very unfavorable for business. Yeah. High interest rates are very unfavorable for business. And remember, these are company stocks. They must make a profit, you know. So in most cases, when there's high inflation, stocks do not do so well because of the interest rates that the central banks often impose. But when it comes to bonds, it is actually the opposite. So inflation is generally negative for bonds because bonds payments are fixed. As inflation rises, these payments becomes less valuable, causing bonds prices to fall. So you can see we have bonds and then we have bond yields. So investors demand higher returns during inflationary periods. So bond yield rises, bond prices and yields move in opposite direction. So there's a difference between bonds and bond yields. So whenever we have high inflation, then the bond yields will automatically rise because of high interest rates. But when it comes to bonds and stocks, then it is just the opposite. So this is just the banger. When interest rates goes up, borrowing money becomes expensive. You see, this is why we are seeing the stocks mostly of companies are hurt. Remember, the central banks, they must come in to control the situation in the economy to bring balance. And how do they bring balance when there's a high cost of inflation? They increase interest rates. So when interest rates goes up, then borrowing becomes expensive. People do not borrow because how will you go and borrow when maybe the bank is at 20%? How will you make money in that environment? It is very difficult actually. But when the interest rates are low, you as the as the what as a business person or entrepreneur, you'll take advantage because you will be able to maximize production and then thus maximizing profits because of favorable room for business. But when the interest rates are too high, you just say, it is not the best time to borrow money because it means you'll pay double with a high interest rates. Calculate borrowing money at 18% per annum and maybe at 14 or 15 or 13. So if you're a business person, I guess this topic for you, you'll understand it clearly. For me, I'm a teacher by profession, but we have to understand this. So you can see what happens when the interest rates are up. People and businesses take few loans and they spend less. This reduces the demands for goods and services. So prices stop rising quickly. So the same goods that people were racing to get, they don't have interest in that because of the high prices of them. So like just a few can afford it, so that brings balance in the economy. So that is how inflation is reduced. So in this case of ours, USD already is printing a very hot inflation. The inflation rate is high. So what do you think will happen when the inflation rate is high? Obviously, the interest rates goes up, and this one will favor US bond yields. It will favor US strength. That is why when you go to the DXY right now, you can see for that week we have been bullish. For this week, this from when the reports came in from Tuesday, Wednesday, we have been bullish all through because of the high inflation data. So let us go up and understand a few things before we go to the charts, before I show you how to maneuver. And I hope I'm not talking too fast, but if I am, then there is notes which you can take your time and look at them at your own time. So we have the CPI. So when you talk about the CPI, what is this CPI? So CPI, it means the Consumer Price Index. Okay. So this is the average change in prices of a basket of goods and services, whatever the consumers are buying, in short. Everything that the consumer is using, it is found, it is calculated, and that is what brings out the CPI data. And this CPI data, it's anything: food, transportation, housing, rent, you name it, energy, gas. But now we have a difference between CPI and core CPI. So when we talk of CPI, CPI measures everything that a consumer uses. So that is what we call CPI. But when it comes to core CPI, we eliminate two things. We eliminate food and energy because those prices tend to be volatile. I don't know if you're getting it. So when we have the data of core CPI month to month, those are all the prices of goods and services that a consumer takes, excluding energy and food. So when you talk about CPI mostly shows us the overall cost of living. How is the overall cost of living? Is it high? Is it moderate? Are we descalating? Are we accelerating? Or we just the same? But when you look at core CPI, we look at the long-term inflation trend. How is inflation trend in the long term? So you can see cost CPI is a version of CPI that excludes food and energy prices. It focuses more on stable underlying inflation trends. That is why we are saying it gives us long-term inflation trend data. That is the work of core CPI. So this data is used by policymakers like the Federal Reserves, and it will guide them if they should increase rates or lower rates. Actually, because that is the work of the Federal Reserve, like the way we have Central Bank of Kenya, whereby they are in charge of all the monetary policy. So that is the same work that the Federal Reserve does. So you can see a high CPI means that prices of goods and services are rising quickly. In other words, inflation is high. So when you come to your charts here, come and look at CPI. We have 3.8 and they had forecasted 3.7. So what does it mean? Inflation is definitely high. When this number is just surpasses this, when it surpasses the forecast, then when it is greater than forecast, then it means that inflation is high. So for consumers, this means food costs more. Ile chakula unanunua, hununui na hiyo bei tena, lazima uongezeka kitu kwa mfuko. Rent increases, fuel becomes more expensive, everyday living gets costlier. That is what means when CPI data increases. So if CPI inflation is 2%, prices are rising slowly. If inflation data is 8% and above, pricing are rising much faster. So when we look at our data right now, we are at a 3.8%. So we just chill there in the the inflation is rising slowly, not that fast. So that is how I can conclude. So why does this information matter? So it matters because the central banks like the Federal Reserve. Now we are talking about US. So the central bank for US is the Federal Reserve. So how do they respond? They respond by this. They raise interest rates. And if they raise interest rates, what does it do? It makes borrowing more expensive. So you'll find like a lot of people are borrowing less. And this one curbs their spending and it reduces inflation. It is as simple as that. When we come to you can see now we have finished CPI. CPI is just that short. So we have CPI, core CPI month to month. means month to month. CPI month to month and CPI year to year. So you can see the level of inflation is increasing. So you have gotten the answers. When the inflation is increasing, the Federal Reserve remains hawkish. It doesn't have the necessity to reduce rates, to cut rates. Why? Yeah, why? They need to control the maintenance in the economy, so they have to reduce the spending, and that one is by increasing rates. So let's come to PPI, Producer Price Index. The Producer Price Index measures the average change in prices that producers and businesses receive for their goods and services. So instead of tracking consumer prices, it tracks prices in the supply chain. Now sasa hapa tuko kule huko juu. You remember I was talking about the chain of business whereby we have the manufacturers, and then from the manufacturers, when it gets out of the factory, the producers and manufacturers, we have these who do we call them? Is it the retailers? Not the retailers, distributors. We have the people who distribute the goods. Then you have those people who sell it at wholesale and retailers, and then finally you, the consumer. So if the prices of making these goods or services is high at the producer level, then why do you think you as the consumer will get those goods at a lower prices? That is a lie. If the prices of producing these goods is high, then you as the consumer, you will get even double the price, because you're the last person in the supply chain of business. I never did business, but I hope you get it. So instead of tracking consumer prices, it tracks prices early in the supply chain. Example, it's good. I'm even giving you an example. Steel prices paid to manufacturers, farm products prices, and wholesale fuel costs. So if, for example, let me take because in Kenya we are a very agricultural country. Let me say, for example, the farmer who is doing all the work, who is taking potatoes and putting them on the ground so that they can multiply, planting onions, planting tomatoes, etc., etc. If it happens that fuel prices are hiked, or if it happens that there is the rainy seasons, most of the goods, those agricultural goods have been damaged, mind you, that price will hike. That is inflation. Inflation will start at the producer level. So you as the you as the last person who is consuming the goods, you will buy that product times 2. You'll buy that product times 2, so that this person who is at the producer level can get a profit. I don't know. I hope it is understood. So PPI often sees as a leading indicator of consumer inflation, because higher producer cost can later be passed to consumers. This is what I've been talking about. So core PPI excludes food and energy. I've told you those food and energy prices are very volatile. So this one, core PPI, shows us the long-term trend of inflation in a particular economy. And in our scenario, we are talking about the US economy. So because this category are highly volatile, it helps economists to see the underlying trend in producer inflation without short-term spikes. Why should you watch PPI? If PPI rises sharply, like the way it has risen here, you can see we have 1.4. This is a rise sharp, because if you go to the history, you'll find that if you come to your Forex Factory and take time and scroll, you'll come and see that was the hottest print that we have ever had, 1.4. We have never had another one like that. So if PPI rises sharply, businesses might raise consumer prices later. So be keen to check what will happen to the CPI of June based on this data of May. Inflation concerns increase. Central banks might consider tighter policy. Okay, they may consider tighter policy, interest rates up, up, up. And when an interest rate is up, then that one means that that currency is stronger. So why should you be buying euro? Why should you be buying GBP in such a situation? That is completely absurd. So what rising PPI means, businesses may be paying more for raw materials, they may be paying more for manufacturing inputs, they may be paying more for energy, they may be paying more for transportation. For example, a car manufacturer paying more for steel and parts. Mind you, when you buy that car, if a person is using more money to produce the car, you will buy that car twice the amount so that this person can retain his money in the pocket and also to cater the transportation cost in between. So what happens? Businesses may raise consumer prices. Companies often pass higher costs to consumers. Profit margin may shrink. If companies cannot raise prices, profits fail, earning may weaken. Stock can be pressured. Market may expect inflation. Investors may think inflation is building. Interest rates could stay high or rise. The central bank impact. So, a sharp rise in PPI may increase the expectation of rate hikes and tighter monetary policy. It is as simple as that. So that is why when you come to your DXY, you'll understand why we are buying. Why USD is buying. It is not because of order blocks. It is not because of resistance. It is not because of support. It's just because of the fundamental that is surrounding this week of high inflation. And you can see what high inflation does to a particular economy. It is as simple as that. Now, coming back to technicals, because fundamental sets the bias. Technicals show you where to enter. So this was a trade that I had anticipated, I had analyzed on the first week. I was expecting the second week we start the manipulation and distribution. But there's something interesting that I have realized on Euro USD, especially if you are a swing trader. And this is coming to a higher time frame, like the way they always say, a higher time frame bias is always key. So if you always analyze using the 1 month time frame like me, it is always advisable to get your bias from the 3 months time frame. And I want to show you how. So let it load and we see how beautiful we had beautiful setups that we had this week in concurrent to fundamentals and technicals. So let it load. Good. So this is the daily time frame and you can see what has been happening to euro. Even without going to the higher time frame, I want you to see what has been happening this week. We had the opening of the second week on Monday with bulls, which were coming back to a key level here. And then from Tuesday, when the news was printed showing that US was stronger than other currencies, for euro, we started the fall, then Wednesday, Thursday, Friday. You can see how simple it is. So I do swing trading and I used to do the 1 month time frame. You can see it is marked clearly. But there's something sweet that I discovered when profiling using the 1 month. And I want us to go to the 3 months time frame and you tell me if you're seeing whatever I am seeing. I don't know why it's glitching, but let's hope for the best. So there is our charts, and I told you the best way to analyze the chart is not by using candlesticks, but it's by using line charts. So the best thing I have to do here is line chart, and then I see the market structure. What have we been forming? Have we been forming higher highs, higher lows, or lower highs, lower lows, or are we still at the same point? So when it comes to the 3 months time frame, you can see from I don't know which year is this, from around 2017, we have not broken this high yet over the past years. In fact, we have been going with a downtrend like that. We have been downtrending like that. Okay, so we have been making a lower lows, not lower lows, I mean here where my cursor is, that's lower highs with lower lows and lower lows. Where my cursor is, that's a lower low, lower high, lower low, a lower high, lower low, lower high, lower low, lower high. So we haven't broken yet, but we will see whatever will happen in the coming what? In the coming months, yeah. So that is something that we should watch. I also remember I drew that zone there. I drew it as I was starting my analysis. We have that beautiful zone there, whereby prices has not broken this zone yet. When you put candlesticks, you'll see. So we have this one now. This one is a support. When you look at this is support where my cursor is. That is support which has turned into resistance. We have resistance 1. Where my cursor is, we have resistance 2. And funny enough, price almost reached there. It hasn't reached yet. So we have this is what we call an SBR. We have an SBR on the 3 months time frame. Yeah, on 3 months time frame we have an SBR. Actually, prices has not reached there, but in case prices may start rising, then this will be my next zone at around 1 point. This is 1 point. Let me read it for you. 1.23047. 1.23047. But that was just by the way. There's also this one. I want to delete this because there's something that I saw and I want you to see whatever I saw. So here I'm just looking at overall market structure, nothing else. So when you see me drawing this, I'm just looking at my overall market structure. There's also that zone that I saw, that one. So I've removed the first line because I don't want to put a lot of lines because I don't want the charts to look messy and confusing. So it is that zone there, that one, exactly like that. So you remember it has to touch these V's in the most appropriate way. These V's, those V's, those are resistance. In short, this is what we call classic A. You can see when I put my cursor here, there, 1 touch, 2 touch, 3 touch. So in case market comes and breaks this resistance, then my next stop will be at this SBR, as long as I see any CRT forming around this zone. So but for the way the markets are continuing, I don't see so far, because as long as the dollar is strong, as long as the DXY is strong, then we will short. So you can see how many times that zone has been retested. Look at how many times that zone has been retested. Here as a support, here as a resistance, here as a resistance, and here as a resistance. In fact, this one, we see this long wick for the bears. That was January's candle, closing in February's candle. When you go to the daily time frame, you will see it very clearly. You will see it very clearly. Let me reset chat. I want you to see. Leave the first one alone. Leave the SBR alone. I want you to see. Look, it is the. I want to expand it. So here it is. You can see. This was February now. That was February. This was January, which was acting as the week. The manipulation itself. For that January, this was the manipulation itself here. You can see that was January, the closing of January before we came to February. Then the February came and retested this fair value gap, and we had beautiful swings up to March. So, and the market still plays like that. The market never changes. So if you are using the monthly time frame, you can come to the 3 months time frame. You will get what do we call it? You'll get beautiful setups for swinging. So you also have this support right there. That support. I'm using this support and resistance to get the market structure. So far, we have neither broken any highs. We are still on a downtrend. Unless this high, this one, where my cursor is, unless that high is broken, then we will have changed character from bears to bulls, because this last swing high has been broken, or this last lower high has been broken. But still, if it still obeys this trend line support, then be sure we're still shorting euro, unless otherwise, unless there's any major event that will happen. So I want to teach you how to use CRT, because already the market structure has already revealed itself with this resistance trend line and classic A. Remember, classic A is SNR concepts. That is how you draw trend lines. You just don't draw trend lines anywhere. So I want you to teach you how to use a previous week. If a candle has a week, I want you to teach you how you can use OHLC and that week to get sniper entries. And this is what you could have. This is what you should have. This is what you should have done this week in regards to Euro and GBP USD. So this is the 3 months time frame. I want you to do something like this. Since the 3 months time frame is the one which is giving us the what? Since the 3 months time frame is the one which is giving us the bias, I want us to experiment it right now. Yeah, you see what happens. I want us to come and mark before we come and mark. This is whatever I'm talking about. To those who do not know OHLC, this is what I'm meaning. So rectangle, we have a candle like that, right? This one is a bullish candle. Let's say this one is a bullish candle. These are bears. No, these are bulls who are in control. These bulls, what happens is that, let me see if I can get a path. What happens is that a price will always open like that, manipulate down at a higher time frame PDRA, change character, come back to any fair value gap or order. Sorry, today my videos are because of charge 1 2 3. Then it will go form a high, and then it will come and do what? And close. So down here is where I'm talking of a higher time frame PDRA, and the same case always happens for a bullish No, for a bearish candle. Let me see if I can get whatever I am looking for. Is whatever I'm looking for here. So maybe, for example, this one is an order block. There, that one is an order block or a rejection block. So you'll find that price will always come here to the opening price, and so that is how it looks. Sorry. Yeah, so you'll get something like that. So we'll open. So no, the opening price must be equated here. So we'll open page low like that. We'll open, then we'll, for the manipulation part like this, for the manipulation part now like that, we'll sweep this last swing low to form a new swing low. Then we'll come back. There'll be an imbalance here, or it can either come back to the order block here, come back to the order block where the origin of the trend started, like that, and then it will distribute up, and then it will come form a close. Sometimes it may not form a close depending on the candle that we're having. So you see, so when you're talking in regards to a bullish candlestick, I am looking for something that we can use. Arrow, good. That is the open. That is the low. That is the high of the candle, and that is the close. Something like that. So this one, that one is the open. Open. When you come to here, that is the low of the candle. When you come to here, because we must form a high before we close, this is the high. And when you come to here, this is the close. That is how a bullish candle operates. And when talking of a monthly candle, week one we always accumulate. In most cases, Q1, week one, we always accumulate. Week two we manipulate, then start the distribution. We may rally down a bit, then with week three comes, we get the body now, and week four we close. But sometimes you may find we may even distribute on the last week. The other weeks are just rallying. So we will do a lot of examples concerning OHLC and how you can do this to get high quality probability setups. So that one is for a bull. That is for a bullish candle. When it comes, so this one is let me get a box and write. This one is for a bullish. So this one is bullish candle. Okay. Now for the bearish candle, it is still the same. This is the candle for the base. Now what happens for the base? Let me just drop something like this. What happens for the bears? The bears is still the same thing. We open like that. Then we manipulate higher like that. Then we'll change character like that. Come back to any fair value gap order block. Then we rally down like that, and then we will do what? Close. It is as simple as that. So when you understand this thing, then getting higher probability setups on the higher time frame, it is very simple. It is very, very simple. So when we do like an arrow marker, this one is the open, this one is the high of the candle, this one, this one is the high, this one is the high of the candle, then we go to the low of the candle, and then we go to the close. So it is vice versa in accordance to bullish. So we'll mark here. This is the opening price. This one is the high. Then we form the high. Remember, this is a bullish. No, this is a bearish candle. We form the high, and then after forming the high, we'll go form the low of the candle. Okay, and then after forming the low, we'll form the close of the candle. Yeah. So that is why you'll find that we can have a weekly candle and Friday we are buying, but the whole week we have been selling. It is because of forming the close. We must buy to form the close in case of a bearish candle, and we must sell to form the close in case of a bullish candle. So whatever happens here, the sweep of liquidity that happens here above here, this is what we call turtle soup. Whenever the last high has been purged by the manipulation candle, then we'll have something called turtle soup. Turtle soup is simply the sweep of liquidity, turtle soup, and it happens in two ways. We have a turtle body soup and a turtle wick soup. So we can either have a TBS or a TWS. And this one mostly happens when we have a high time frame. I said a higher time frame PDRA. A higher time frame PDRA which has been knocked. So whenever you understand these two concepts like this, I can tell you, you will make money, and you will make money, and the money will be in plenty. You will make a lot of money. So whenever this high change of character comes to this last low, now this is what we call a QM. That is what we call a QM. You have seen most of my setups, they have a QM. It can also be used as what? Entry. So that is what we call a QM, a Quasimodo. Okay, that is what we call a QM, actually. So, and it always happens after turtle soup has been taken. So you can either, whenever you're entering here, you can either use a breaker block, you can either use a fair value gap. Here you can enter, you can use a QM, a Quasimodo, you can use RBS. There's so much. As long as you're the one who knows how, you will master your model. So that is a bullish candle. Expect this from a bullish candle on the higher time frame, and this is a bearish candle on the higher time frame. So this is what you'll see, and this is whatever I was trying to teach here. Reset chart. I was on the 3 months time frame, and I want you to see what has been happening. So I want us to do this. This is this week, right? I want us to do this. You can see the key level is already marked. Key level for higher time frame is already marked. You can see there. If I zoom it like that, there it is. It's already marked. So put your candlesticks in place. I want you to do this. I just want you to do this. Take your horizontal ray, mark the opening price like that, and the vertical line, mark the horizontal time. So this one will show you when the candle opened time, and the horizontal ray will show you at what price did this monthly candle open. Then you have to be very precise with it. In fact, use the monthly candle and profile opening price. Use the monthly candle to do your trades, but profile using the 3 months. That is the way better to do. So what you can do, you can use this week to enter. You see this week, the previous week monthly. You can use it to enter. I want you to see how the same concept appear. But you can already see the higher time frame bias was tapped. But I just want you to see the same thing. It happens everywhere. It just happens everywhere. So look at that. Use that wick. This is what you call the CE in MSNR. Let me remove for you. You can see where it tapped. I want you to zoom for you where it tapped. Look at this. It tapped. Remember, our key level is marked in green. Here it is. It tapped the 0.5 level. I don't know if you're seeing it. Yes. There. It tapped the 0.5 level, this one. And this green line is our key level. So that was a very, very, very fantastic entry. So whenever you find your CRT when you find your model on higher time frame, like if you are using 1 month, your entry should be on the 1 day. And you can go to the 1 day, find a CRT, then you'll have to enter with 1 hour. So from the 1 month, we go to the 1 day. And I want to show you how swift it was. Just look. We opened here for the month. We manipulated low at this support. You can see that support. That is where I had my previous buys. Then we had NFP. Okay. We had NFP here. Then came back. You see this green line? I don't know if you're seeing this one. Where my cursor is. That's a key level. There's a green line there. So this green line, let me just make it another color like red. Yeah, that red color. And maybe I put it at around 3px. You can see where that red color is crossing. That red color, when it comes to 3 months, it is this classic V. You can see this classic V. I don't know why my laptop is glitching. You can see that classic V. When I put a classic V like that, look, that's a resistance. So when you come to the daily, any CRT around that resistance was very, very valid. You can see how many touches that line has. Look at that, look at that, look at that. So that was a very nice entry, taking these lows. And we have a support on the downside. Here we have a support. So that is my next stop. But we have a monthly CRT in play. That is something that you should put in mind. We have a monthly CRT in play. So you can see it was just that simple. You have a monthly CRT in play. So candle 3, you can use the wick of candle 2 to enter. And you can see it tapped at around, if I remove this, it tapped at the 0.5 level. It is that simple. So the CRT that I'm talking about, the CRT that I'm talking about is this. We have this CRT which is going on here. That one. Come on. You have that one. And this. That one. So we have a CRT low, okay, and CRT high. Good. So when you go to you can see already we are below. When you go to the daily, you'll understand you should always look for selling positions above the opening price because we are shorting. So this is the opening price. You can see where the opening price is. I don't know if it's being seen. Let me just expand. I don't know why it's glitching. This is the opening price there at around 1.17309. So the best place to look for these sales was on Tuesday during the manipulation because Tuesday always manipulates. And you can see it tapped our, let me put this CRT on using black, it doesn't confuse us. You can see it tapped our higher time frame 3 months keys, our 3 months PDRA key level, and it just tapped and fell. So that is how you should be trading, and we are still powering, taking these lows, taking these lows, taking these lows. So trading is that simple. It doesn't have a lot of stress. If you understand the higher time frame PDRA, then you are good to go. The same thing is happening to GBP USD. It's still the same thing. When you go to GBP USD, GBP USD, when you come to GBP USD FXCM, you'll still find the same thing. You can see even my points are even marked. So I won't use this one because those levels, they signify. So I'm waiting for it at this blue line, other blue line. Those levels, they signify something. Come to Forex, whatever, delete everything. Come to 3 months time frame. Look for any PDRA on the 3 months time frame, and you can see we still have the same concept of market structure. We are neither forming higher highs or higher lows. We're still just in these zones there and there. We're still in those two zones. So we're neither forming higher highs, higher lows. We're just in this consolidation phase right here. And we still have another structure here, there. So that is what I am seeing in regards to market structure. So when you come to the monthly, what to do? Okay, for the 3 months, also look at key levels that you can see, and the nearest key level I can see here is I don't know, did I mark these lines? Oh god, you can see I never marked these lines correctly, and that one is can always cost you. So I have to look for the higher time frame PDRA. The higher time frame PDRA here on this case is this. You can use this week. You can see this week. You can use that week for entry. You can use also that one as your PDRA, because for GBP is not as direct as that one for. It's not as direct like the one for Euro, but you see most of all of them, they move in the same direction. So when you come to the monthly still do the same thing. Higher previous month has been purged. You can see for yourself. Previous month high has been purged. So this is a 2 candle CRT as we speak. That is a 2 candle CRT as we speak. We also have a trend line resistance on 1 month. Here it is. That's a trend line resistance. That was the most accurate key level there. That was a trend line resistance on the 1 month. So the concept is simple. You do what? You buy above, not you buy, you sell above the opening price. That's what you do. You sell above the opening price. That is what you are supposed to do. So I've not marked it so well like that. That is what you're supposed to do. Sell above the opening price. At this case, my opening price with my horizontal ray is at this candle there, around there. So what you do, expand like this. So you can see we've marked correctly. Yeah, it is correctly marked. And the vertical line to represent what? The opening time. So when you come to daily, because that is where you're supposed to check for CRTs and everything, you can see it was just a tap and go here. It was just a tap and go. So that I don't confuse you, with these many lines, because I know some people will say that chart is very dirty, they can't see anything. We'll reduce the numbers of a higher time frame PDRA. This one you can see. This one was not used for now. So we have two lines remaining. We have the trend line support and the trend line resistance. That's what we are having right now. We have the trend line support and trend line resistance. This is on the weekly time frame, and this one was from the monthly. Yeah? Now this one is from the monthly. Touch 1, touch 2, touch 3. So when you come to the daily, any CRT that will happen, any CRT that happened on that here, any CRT that happened here, then it was a very high probability CRT. You know, I've not drawn this to precision. Thank you. There was a CRT. As I told you, there was a CRT. So you have a trend line resistance. We also have an open close on this other side. You can see in this other side, we have an open close and an order block. So for me, I always use either the tip of the order block like this. I always use that tip or the open close. But in short, it is just that order block. This is what I mean, trend line. So that is the daily one, and you can see there it is. So you can either use the tip or you can use the open close. So you can use the tip or the open close to enter. And you can see we have a daily CRT, but let me just use whatever most people use. A lot of guys, I'll see them come mark there. They'll say that one is an order block. Okay, they'll tell me that's an order block. We have already purged above the previous day. What do we call it? There we have it. So we had a CRT here. We had a CRT, trend line monthly resistance, and boom, straight to profits. There was nothing much there to do. Okay, but for my case, I won't use the entire. For me, I don't like using the entire order block. I better come, draw my straight line, my resistance like that, so that I can get the most sniper entry. Yeah, that is how I do it. And here we already have a CRT in play. So you can do this. You can SMT with what? SMT GU or EU, because when I open a new tab here, Euro USD, enter. It's not coming. Oh yeah, let me take it to Euro USD the same day. You'll see Euro USD. So you look for liquidity, grab so we already had an SMT. You can see whatever Euro was giving us that day. Euro was giving us this was what Euro was giving us. That one. So this is a SMT GU. SMT GU, because they move concurrently together. Okay, that is SMT GU. Remember, we used the week of candle 2 to enter this trade, so there are so many ways of killing a rat. And GBP USD, it was forex.com. We have a, let me remove this. That was daily time frame. I believe it's still the same. One is forming very sharp higher highs and higher lows. There. SMT DXY. No, not SMT Euro. Just like that. It's just as simple as that. And when you're trading this, always check your DXY. Make sure that your DXY is bullish. Yes, and it is as simple as that. So there we have it. Buy above, no, sell above the opening price at a key level. Short. How you add positions, you still use the same criteria. If you're adding positions, you still use the same criteria. The same criteria is used, nothing else. You just come and do the same OHLC, horizontal ray for marking opening time, and horizontal vertical line for marking a price time, horizontal ray for marking price opening time. I mean horizontal ray, I guess I'm now tired. Horizontal ray to mark opening price, horizontal vertical line to mark time. Then you come to the 1 hour. Look for any PDRE. Look for PDRE in the 1 hour. And my PDRE, the next possible PDRE for my case was that. So you can come here and you look for any key level. So key level we have fair value gaps, breaker blocks, mitigation blocks. So, and I can also see a trend line resistance. We have a trend line resistance. There. So this is all SNR concepts. So any CRT that happens around that zone is very valid. Any CRT that happens around there, very valid. So yeah. Or if you cannot see anything there, if you cannot see nothing, I'll advise you to go to you come to the 4 hour. From the 4 hour, it's usually very clear. If you cannot see anything there, don't force issues, just come to the 4 hour. The 4 hour is very clear. We have an SBR. We have an SBR like that. That. So this will now becomes your key level. This one is an SBR, support becomes resistance. So if you put OHLC on the daily and go to the 1 hour, you're not seeing anything. Come to the 4 hour time frame, look for CRT. So candlesticks, you can see we have a very beautiful setup there, and then we have a CRT here. Remember, you can use candle 3 to enter with gun box of candle 2. So you can see this one is a CRT like that. That is how you continue adding positions, by the way. And then you target the next DOL, as simple as that. Target these lows to be taken because we are bearish. You target these lows to be taken. They must be taken. Either must be taken. So purge. Already we have a purge. You can see we already have a purge, so it's very faint. We have a purge. If you don't know how to enter with candle 3 and candle 2 has a wick, use a gun box like that. It's just that simple. You use a gun box like that. just like that. Yeah, so when you get a CRT on the 4 hour, you'll go to the 15 minutes. For the 15 minutes, you'll check the sweep of liquidity. You can see how that trade was very beautiful. You come to the 15 minutes check. Are all confluence aligned? If yes, if all confluences are aligned, swing highs have been taken. There is a sweep. You can see there's a sweep. It is higher than this. So there's a sweep of liquidity. And you can enter with model 1. You can enter with model 1. This is where model 1 is. Let me see. But we will not enter with model 1 here. Model 1, you'll enter it on the lower time frame, like 5 minutes. 5 minutes is where you enter with model 1. Yeah, and the trading has never been complicated. No. You can use horizontal resistance. You can use QM, but this one is a very bad type of sweep, because this is the sweep that forms M at the entry. So your chances of getting stopped out are so high. But all in all, it was a very beautiful trade. Good night. Bye-bye.